Imagine a world where our investments help build a future that's not only financially prosperous, but also socially and environmentally sustainable. This is not just a utopian dream, but a tangible reality thanks to the growing momentum of ESG investing. ESG, which stands for Environmental, Social and Governance, is reshaping the landscape of investing by prioritizing ethics and sustainability alongside profit. As the world grapples with pressing challenges like climate change, social inequality, and corporate accountability, ESG investing emerges as a beacon of hope. At its core, it offers a framework for assessing the ethical impact and sustainability of an investment. Environmental factors consider how companies address their ecological footprint, from carbon emissions to resource conservation. Social criteria assess how businesses manage relationships with employees, suppliers, customers, and the communities they operate in. Lastly, governance examines leadership quality, executive pay, audits, and shareholder rights. Why should investors pay attention to ESG? The answer is multifaceted. To begin, there's a growing recognition that sustainable business practices can lead to better financial performance. Companies that prioritize ESG factors are often seen as more resilient, innovative, and efficient. They're typically better equipped to navigate regulatory changes and respond to evolving consumer demands. Moreover, they tend to foster a positive corporate culture, which can boost employee satisfaction and productivity. Investors are also finding that ESG investing doesn't require sacrificing returns. In fact, numerous studies have demonstrated that ESG-focused investment strategies can match or exceed traditional investment returns. The integration of ESG criteria helps in identifying long-term risks and opportunities that traditional financial analysis might overlook. Furthermore, as consumers demand greater transparency and accountability, ESG-compliant companies are increasingly favored, adding another layer of financial appeal. Governments and regulatory bodies worldwide are also recognizing the significance of ESG. Policies are being introduced to encourage sustainable practices and investments, adding impetus to the ESG revolution. In Europe, for instance, stricter regulations require investment firms to be transparent about their ESG strategies and report on their sustainability impacts. However, the journey to ESG integration is not without its challenges. The lack of standardized metrics can make it difficult for investors to accurately evaluate ESG performance across different companies. Initiatives to develop universal standards are gaining traction, but there's still a long way to go. Investors must be diligent and critical in assessing the ESG commitments of the companies they invest in. In conclusion, ESG investing represents a paradigm shift towards a more equitable, equal, and sustainable world. It reminds us that investing is not merely about economic gains, but also about the legacy we leave behind. By channeling capital into responsible and sustainable ventures, investors have the power to influence real-world outcomes, steering society toward a future that values both profit and purpose. In the unfolding narrative of global investment, the ESG revolution beckons us to invest smartly for a brighter tomorrow.